All right, everyone. Here we go. We got volatility in the market. And what does that mean? That means opportunity. That's what that means. All right, so let's go through it. I still have my Google short on, 2-to-1 diagonal, and we're looking for a big washout, a big downward move, maybe to 280. I think that's where the current gamma pin is. There it is right there, March 20th, 280. And at 280 or below, maybe I could take profit, right? Or maybe I could sell some, I could sell the other half maybe, because remember I have these March 20th here. Who knows? I'll probably just take profit around this level, 280 and below, and call it a day. I think it's up 140% right now. I can't really recall. But that doesn't include this 43% gain, and it doesn't include these credits, right? That's just the current position, right? Because that's how it's calculated in the brokerage platform. So it's much more than that. But, maybe if we get over 200% gains or something, we'll close the position 300%. That's great. That's what you want to look for. Bros, well, we really got to survive. There's this 45, 55. Now this moved higher over here on the 5th. And when we had our volatility event, looks like it came back in. And, well, we got to survive down to 45. But I don't think that's going to work very great for Aprils. The market would really have to come off and rally really hard. So we may lose the Aprils here. And if I tried to short like a 55 in March 20th, I think I'm only going to get like 20 cents or something out of it. I don't think it's really high. But we got our Octobers sitting out here. We got our Octobers, and we're still trading the spread, and we'll see what happens there. TPL, I took TPL off. Why? Well, the gamma spread shifted lower. It didn't do anything. It didn't do anything since I ran attack. This is here, right? Go over. Unch hasn't done anything. And that's kind of crazy. Oil's up. What is oil up now? Let's see. From March, 63%. Well, at the time it was like 40 something, right? Okay, maybe TPL goes up. Who knows? But I just didn't really like the fact that oil rallied so much and TPL didn't do shit. It's just weird price action, and I'd just rather not sit around and deal with it because I only have 2 weeks on that trade. So I closed that and made 18%. Right, that's fine. Let's move on. Now rig went down. That's offshore drilling. Occidental up 2%. So I don't know. Maybe this is just all driven by the options market. There's a really big pin here that's sitting at 55 and it hasn't moved. Rig is $7, $4 spread, and that hasn't moved. So maybe maybe it is just all the options market. It has nothing to do with what oil's doing, right? Maybe people think that it's a temporary thing. That could be it, right? Who knows? But we got opportunity, right? And what's fantastic is, just searching through a mountain of alpha and looking for ideas. I haven't really seen any strong ideas. And that has kept me away from buying a bunch of equities. And that's great because when you get increased volatility, the implied volatility of puts goes up. That's what you expect, which means the deltas go up, which means dealers start selling. And they can even get a flip point where they're now net short the stock and they're just constantly selling the equity. So AMOA has actually kept me away from allocating a bunch of money into a bunch of longs. And there you go, right? Like it almost like protects your capital because it tells you when to buy, when not to buy, which is really good. You need that in the system. So what does this mean? Well, the overall volatility in the market is what's down here. Remember what I said is like when you're down here, you got to be a bit careful buying longs because everything looks really good, right? That's like SanDisk, right? That's like Western Digital. It's like all these equities, right? It looks really good, and then you start getting these rotations out of it, and look at that, it's flat since February now, hasn't done anything. So it keeps you away. It keeps you away from like FCX. See, you get your rally, and then it just completely rotates. So they look good during the time when volatility is low, but then they just go sideways eventually, right? And then what? Like, your options are worth nothing. So that's really good. And now that volatility is elevated, well, you could take really short-term trades. You could, do 0 DTEs to one week DTEs, and because volatility is elevated, right? You become a day trader. You can make money doing that, but you got to be careful because, man, volatility is tough to trade. If you buy a put and volatility comes down, it rallies, you're fucked. So day trading is brutal. You got to be careful with that stuff. But what I'm planning on doing here is there's two scenarios. One is that we get chopped like 2022 in the vol space, which means the market's going to fall and rally, fall and rally, fall and rally, but it's going to trend down, right? That's like 2022. Big events like this, you typically don't get chop, right? You don't get chop. You get really big liquidations, and that's it. And then you continue to rally. So what I'm looking for are spreads that are long term, and I have a 60 gamma, but I'm gonna bump this out just to really filter where spreads are. And I should probably like have a thing where it's like price below spread, price above spread. That might be kind of good. But Reddit to me is the clearest one. I really want it down here in this area, below 95. I want to just completely murder this long-term put right here. Just like here. You see how it just murdered the call side, and that was your short opportunity. And then it murdered the call side, and that was your short opportunity, right? So anywhere above is a short, anywhere below here is a buy. And just like back here in this volatility event from the tariffs, it pushed down here to 80, and then we rallied all the way up to 280. And what is that? 5 months, 6 months, something like that? So I'm looking for the same scenario as increased volatility. I want this to just plow through that 115 and sit down in all of these puts. I want it to sit down all down here. Like there's this big one at 95. If we do it per, we could see it. There it is. So I want it to crush. And so look, you see like all the put spreads for each expiry are sitting here above. So I want it to just completely murder this May 15th down here. I just want it to go blah and just really come down here. Now, if that happens, I want to be buying December 115 calls outright. And this is my plan. So I'm planning everything out. Increased volatility. I want to look for eventual longs below the spread because it's going to extend past it because of so much volatility that dealers aren't going to be able to compensate because there's just too much volatility. So they're going to be gamma squeeze to the up or downside. And I'm planning on two scenarios. One scenario is that, let's say it's 90, $95. I buy the December 115s. I buy them outright. One scenario is the chop. Well, when you get chop, you would anticipate a rally into a pin, and then there I would start selling the front month. I'd start selling, so this is December here. This is December. This is the spread. I would start selling front month calls up here, anticipating that when volatility, where's my drawing tool? Here. That if you get your vol event, you buy the long dated ones, you get your compression, you sell the front month, the stock goes down, right? And then it goes down, but you don't do anything, and then it rallies, and you're selling on rallies. That's what I'm trying to explain. So Reddit, the anticipation, I want it to liquidate. I want some consolidation. I'm going to wait for consolidation, right? Just see how the price reacts. I'm not going to buy it right away. And if you get a rally, maybe it's earnings, who knows, in May, who knows. But let's say you get a rally. Well, here you could sell front month calls. Well, it doesn't have to be at the money. It could be like 180, whatever. To where you're pulling money out. It's like a theta strategy, but it's a directional theta strategy where if the market falls, you collect your credit, then it rallies again here, then you sell another credit, it falls here, right? This is the scenario in which volatility remains elevated and it's really choppy. And then you collect your credit, and at some point you've collected enough, you could just let it sit, and then you want it to blow through your 220, right? That's like one chop plan. The other idea is that it just consolidates down there, like you get a really big vol move. You could see like really big vol moves don't produce chop, this is the chop I'm talking about right there. If you get a really big vol move, well, maybe you just don't do anything. Maybe you just hold on to the outright, and who knows what the price is at the time. But you're just anticipating these types of ideas, right? So in Google, when I got the rotation over, I converted it to a 2-to-1 over here. And you could see that I reduced my entry to a 540 blended, which is actually less than that because I didn't include this other spread gain, this 43% gain. So it's much lower than that. And right now I think it's at 130, 140% profit, but that doesn't include the credits I've taken off in this gain here. So it's much higher than that. But it looks like we're hitting this 24,000 pin so far on NASDAQ. That's where the put gamma is. S&P 500, I can't remember where the put gamma was there. It looks like this is going to liquidate to 6,400. It's just in no man's land in terms of technicals, right? 6,400 and then like 2,300 somewhere in here with the NASDAQ. And yeah, so this is just what I'm looking for. I'm just like going through, trying to look for really obvious longs that I can look for because volatility is elevated, which means I need the price below the put spread. Like I need it below here. Rental and leasing, I don't know if I want to deal with that. Step, look at that, sold right at the pin. Look at that, going down here to this 30. That would have been a great trade. Hindsight. You can see there's not much. Okay, rig. Yeah, look, rig. It just sold at the 7. That'd be wild if it goes down to $4. Everyone would be caught off guard in that one. Maybe Array Digital is a good short. Who knows? There's a big spread there. It's very thin though in options. Liberty Global, maybe that's a short. Telecom looks like a short. Packaged Foods. That might be an interesting short. It's a defensive name, but it may be too far out. Yeah, and some of these, maybe if this pulls down, it's software infrastructure, SPS Commerce. If this pulls down below this 55, it's 130 DTE, so that might be okay. Let's see. There's not many, so that's good. If you can find a system that, okay, here we go, Trip. It's on my watch list. So if we can blow past this $80 with some volatility, and we get 2 earnings. See that? 1 earning, 2 earnings. And so you get 2 earnings to help push this higher. So maybe Trip is a turnaround story. It's kind of antithetical to all the logic that you would think about during this event, right? High oil prices, that's going to hurt airlines. They may cut back on flights, which means the cost of a flight is going to be more expensive, which means consumers won't uh, travel much, right? So you know, you could come up with all sorts of things to not trade something. But we'll see what happens when it comes down to this $8 level. Let's see. Okay, TNC, 130 days. Industrial machinery. I know there's yeah, I was gonna say pollution treatment. That's what it is. This one, PCT. So PCT might be an interesting idea. Maybe we could get $4 out of this, but there may not be a lot of opportunity with these low numbers. It's a $5 spread, and if you're gonna buy a $8, it's probably $1, and you're gonna double your money. I don't know. There could be like just really bad risk reward profiles in a lot of these names, and you just got to look at it when the time comes. But look, that's it. I scanned through it. So Reddit is the only really high quality idea I've seen, but you really want this to just slam through the 115 and consolidate below here like this. Slam through, push, console, push, and pushes up, consolidate, comes down, pushes up, and technically right there is where you buy, but I'd be willing to buy this down at 80 if it hits there again. That's what I'm looking for, just a big flush. Give me a really big flush down to this 95, right? You could see that here. See? Yeah. Okay. So what are we going to do? Well, pretty much sitting on our hands. I don't know if I want to do any short-term trading on this stuff. Silver and gold's getting smacked. Russell's getting smacked. I don't know what TLT is doing. Wow, yield curve is pushing up. That's not a good sign. You don't want the yield curve to have a bear steepener like that. High data centers. Yeah, they got smacked. Look at that. Isn't that crazy? It seemed really lucrative to start placing some trades in here, like especially around this level. But knowing where volatility was, right? That's in January. Look, see? It's a good example here. So I think the charts looked really good in APLD, if I recall. This was January. This makes for incredible discipline. Just incredible discipline. Okay, it's not too obvious. I think it was more obvious on the bigger pushes here, if I recall. Maybe it wasn't APLD. I'm trying to think. There was some equity that was very similar. Let me see if I can get it before one of these big pushes. Okay. So this is probably like just like some delta. Yeah, see, it's like, you see it's all call delta. You see all the call delta, and there's this deep in the money call delta right here. So very small movements are really driving a lot of buying from this deep in the money call delta. And especially this put one's going to help elevate it higher. You'd probably want to target here, but the delta side looks really great. On the gamma side, well, there's this trap here, 23, 25, but that's a lot of call gamma. So you might get a squeeze there, right? Open interest, it's all deep in the money open interest. So things like this, when volatility is down here, see? Well, look at this spread. There's a 17-21 spread. You see how the gamma spread's pushing higher in this? We know it's sitting at 30 right now. And let me go back here. So you're like, okay, maybe I could trade something like this, but I know volatility is really low. And if volatility starts pushing higher, this thing's just going to chop sideways, right? And depending on how far volatility goes, well, like, you're down. So you had this little move here, and then it completely rotated, and now you're down. Now that stock is losing. So it really keeps you out of the game when you need to be out of the game, right? If you look at volatility, like it was down here, remember? And now it's pushed higher. But when you're up here in these higher levels, you want to think about placing the longer term trades, but you want to get them at a crazy deal. You don't want to force a really quick trade, because stocks do go down when you have this reversal here. So you have this big push, another big push, you get this reversal, stocks will still go down through this level here, right? And volatility is still elevated. Even though volatility is going down, stocks can still go down. So you can wait, just wait and wait and wait and wait and wait, and then you'll see that things have normalized. And when things have normalized, you're sitting deep down here in these levels. And that's when you start thinking about your longer term spreads out here. You're thinking, well, Stan says, Drunkenmiller, he says he looks out 18 months, which, it's probably a little too far for me, but you're not trading on the present. You're trading on the future. And if you envision a future where the Iran war ends and things normalize and stabilize, okay, then oil's going to fucking crash and volatility is going to go to zero. That means the market's going to lift and go higher. And do you think it's going to take a year for that to resolve? Do you think it's going to take a month? Like, you're trading the future. Who cares what it's done in the past? Who cares what it's doing now? You're trying to anticipate the future. And we know that in 30 days, because this is a 30-day measurement, that they're anticipating a big move in the next 30 days, right? And daily, what is that? That's 30, 16, 1, 8, 7, 5. Oops, 16. 1875. So 1.875% move on the day. But obviously volatility is higher right now because it's not open. And we're already at 1.875. 1.87. We're already there. We're already opened up there. See? And so on NDX, we have the gamma at 24,000 and 25,075. That's the levels I have here, and that's from March. So we're approaching this put level, which, remember, when you have really high volatility, it could just blow through there. There's nothing that says it has to reverse because it's going to be very directional. And you just have to watch the price action around 24,000. And if it looks like everything has paused, the market's just flatlined. And usually you could do that just by watching this shorter term price action here. Well, you could see someone stuck because you can see the curve. You see that curve? It's like some hedging curve. And we'll see what happens. I mean, it's only 6 p.m. We got a lot of time here. But we'll see what happens at 24,000. If it flushes below and starts consolidating and slowing down and slowing down and slowing down, that may be indication you get a reversal. But we're not I'm not day trading this, right? The big buys are somewhere around this level in here. Maybe for a temporary rally. And if it's Chop City, you would anticipate another lower, right? Here, and then it's Chop City, you anticipate another lower, right? It's 2022. It's this one. See? Here, you're like right here. You're right here. And if you push lower, you bounce. It comes up in the average, pushes down, pushes up, pushes down, pushes up. See? Chop City. So that's what we're anticipating. You're anticipating a push, and then a rally. And if it's Chop City, you anticipate another push down. And if it's not, well, you're off to the races, right? And it depends just how strong volatility pushes through this move. If volatility stabilizes around here and comes down, it may be Chop City. May be really big Chop City. And we're just going to have to be a little bit more patient with things. But we'll see what happens. I mean, if this blows up into 600, well, we're probably not going to get Chop City. You don't see that type of stuff. Like this COVID, that's when the entire economy was shut down. That was March 2020. How did that do? Well, March 2020 was a big liquidation, no Chop City. See that? But Chop City was 2022. So do we get one of these? Do we get one of these? What do we get? We'll have to wait and see. So I'm really happy that I was able to be disciplined and stay on the sidelines, because there wasn't any high quality ideas that were popping up, and that most likely had to do with the fact that volatility was so low that we weren't seeing any ideas come up. And now that volatility is increasing, it's pulling the price down further, which is now giving us opportunities to go long on things. And it may be a case that we could do some of these data centers at a point. Let's look at IREN. Well, IREN has a 35.50. There's a lot of puts down here, so that's not entirely clear. Nebius owns some of ClickHouse, kind of a same spread there. You can see it's trading within that range there. There's this big one here at 60 and another at 55. So maybe somewhere down here, maybe the trade, right? So you can see there's this longer term spread, 70 to 170, longer term after 2027. So maybe it is a little push lower down here into the 55s and then a rally towards the end of the year, right? So you can kind of identify where a lot of these spreads are. Look at the IREN spread here, man, 25 to 110 after 2027. So maybe that's what we're going to get. Maybe we flush down to this 25 and then we think about a longer term trade in something like IREN, these data center plays, right? So there's 30. I want to move this just to 25. I want to be a little bit safer on these ideas. I want these things to really come down, maybe even come down to one of these levels here. 60 APLD, look at that. Looks like that's coming off. That one doesn't look so clear. Yeah, that doesn't look so clear. HUT, I don't know if I want to go HUT. Equipment, AMAT. AMAT had a big reversal. Let's see. Okay, it's got a put. Oh wow, look at all those. So this could actually be a really big aggressive rally if we get a non-chop event, right? What I mean by that is we have just to watch price action. That's all that matters here. And if you get a really, really, really big move in the VIX and equities like this don't move at all, maybe it will, who knows? Market's not open, I don't know. If you don't get a really big move in these things and you anticipate that, well, volatility's at the upper end, that means volatility is going to compress. You may get a really strong rally out of these because it has so much call gamma overhead. Is it all delta names? Yep, strong delta names, deep in the money. It tends to happen that when you have equities like this, volatility moves can really tick this thing down pretty aggressively. And whether you want to buy the dip or not could be a short-term opportunity. So these ones you just have to keep an eye on and kind of go with price action gut more than spread gut. They're just going to be really volatile. But that's all I got. Basically, I'm just waiting for Reddit. That's all it seems like, right? TTD, Reddit, maybe Trip, if you can get it low enough. And just kind of try to trade the longer term picture. But we're in no man's land technically, on technical perspective. Like we're just in between some technicals. And we're really targeting this level down here. We know the spread is at 24,000, which looks like we're hitting right now. And I would anticipate that we would push lower into like maybe 23,000s. And then maybe through March 20th, we would target the 24. Who knows, right? But I'm anticipating something around this level of consolidation, somewhere around here. And whether we chop or not will be how volatility is responding. If volatility is pushing like really high up here, I highly doubt we're going to be chopping. But if it comes up a little bit and then reverses, you may get some chop in volatility, right? And that could be a sign for lower markets. So we'll just see how things evolve on Monday. Right now, things are not rosy, but that's okay. We'll see if our Google trade can hit this 280 and lower. May take some profits, but if I'm going to hold on to Bros, I may not take profit on Google because that's compensating me for losses that would happen on Bros. So if I pulled off Google, then it means I'm outright long, which may not be the baddest idea if volatility is really elevated, right? May not be the baddest idea to kind of turn the portfolio net long, but I'd really want a really big move in Google, and before I do something like that. Now, Google would probably just compensate me. It's very close. It may just compensate me for these Aprils. So if this goes down to that 45 pin that's down here, Google may just compensate me fully for this April position, and it'd just be a wash, right? But I have these Octobers. So we'll see how things go, and I'll just watch price action and maybe take some short-term trades because volatility is elevated. And if I do, I'll report on that. But that's all I got. It just means opportunity. Be very patient. Be patient. Be patient. It's better to err on the side of patience. Watch where volatility is and the probability of volatility, because if we do get a big move in vol, it's not going to stay there forever. Look, this is since 1990. See that? And we just have to see where we are at the time. That's it, guys. You can't, that's all you can do, right? So I got Reddit on here. That's my biggest conviction buy below 115. I'd really like it just to get slammed down there and show me some type of buying coming in, right? Show me some type of buying, and then try to ride the next wave higher. That's what I'm going to try to do. Now, CoreWeave is another idea that I just thought about. This has a 170 pin. Look at that, 170, and it's trading that pin. Let's see if it's still there. I think it is. CoreWeave, Gamma. Okay, it's still there. It's for March 20th, 70-100. See? And it's just kind of trapped between those levels. Doesn't look very obvious what's going on here. Per expiry. There's some really deep puts down here. Yeah, volatility can kind of drive this lower. We'll have to see what happens after March. I'm not sure where the market's going to rotate. What is SPX? Is this clear on what's happening here? Okay, so it's got a 6,700, but we already blew past that, right? We're at 6,600. So we're down here. And we're in no man's land right now. Yeah, we're in no man's land. And that means what's going to be more important is the technicals. So watch the technical levels. When volatility elevates like that, you need to watch technicals. So that's 6,300 on the weekly. Daily is 6,400. So watch the technicals for your ideas. Technicals become more apparent during high volatility events. If you go like really short term, you could see that they're just trading technicals, selling. They're just selling this average as it's going down. Let's go here. Okay, 24. Hey, what happened to my gamma levels? Did I get rid of them? It looks like I got rid of them. That sucks. Okay, 24,000, 25,075. Right? It's like these levels here. So I'm looking for something down here. Maybe push up into 24,000 temporarily. And that's just what I'm looking for. So anticipate the future, try to trade it, wait for your opportunities, and think longer term as volatility is escalating higher, right? All right. Thanks, everyone.